I want to welcome everyone to the June 2021 live question and answer Patreon session. Thank you so much for being with us. Again, as I always tell you, Patreon members, I appreciate you. You help fund the cost of running the website, the webmaster, the email costs, the cost for the texting service, all that. Thank you so much. I hope that you receive back from us in spades based upon the information that we share with you. I'm going to concentrate. I'm going to deal with a couple of your questions, of course, as I always do. But I really want to tell you how excited I have become with these weekly vertical crossovers that I just started sharing with you guys. I'm not sure how many of you are paying attention to the gold that you are getting, and that is not GOAL, that is GOLD. It is amazing. I have done some stats on these, and I would encourage you to do the same. I always ask people to back check me. I was not a math major. I did do well in math in college, and I did okay in statistics and all that with my MBA, but I got a law degree, so but I did have an undergraduate in business and a master's, so I can do some simple math. And I have gone through the May 4, 2021 email that we sent you with the 4 up moves and the 16 down moves. I have discovered that with those 4 up moves and 16 down moves, the rate of success is incredible. I've also checked out a few of the others, and I'm finding exactly the same thing. And when I say the rate of success, I did this over the weekend and looked at the entry point, and I got out of because I tell you guys all the time when I'm using the regular charts that you see before you, and I go back and look at the weekly vertical crossover, and I look at the closing point, like it says there at 413.46, not highly accurate. Why? Because it's the Heikin Ashi candlesticks and it's using the Heikin Ashi numbers, which the Heikin Ashi candlesticks are very helpful in helping us see the average pace movement, but not super accurate when it comes to what the closing number was. So what I did is I went back and backtracked all 20 of those weekly vertical crossovers on the S&P 500. There were 4 up that week on the week ending May 14, 16 down that I shared with you. There were more down moves than that, and I tried to sort through the crappy ones versus the more decent ones, but I gave you 20 nonetheless altogether. There were only 4 crossovers going up. Of those 4, they ranged from 0.85% up to a high, to 3.85. I'm sorry, the highest was 4.63. That was Schlumberger, SLB. That's what I actually did my option contract on. I had a 20% gain within about 4-5 days. It was pretty amazing. And again, that was just one example. I traded against the high number of volume moves down. I'm familiar with Schlumberger. I've traded it in the past many times. And I was amazed. I really got into the Greeks on this. I looked at where Schlumberger was. I looked at, and again, I've never taught you guys any of this. If you're interested in it, I'd like to hear from a number of you, and I'll try to put together a more in-depth training for you. But I looked at the delta and the gamma. And again, just so you guys know that when we start talking about options, and I hope all of you have taken what you get for free, which is that 3-part series, Options Made Simple, where I encourage you to get into options, experiment, practice, trade them. And of course, as you get better, then you want to sort of go a little more in depth. Well, the delta is the percentage measurement of the impact of a dollar change in price of the underlying stock. So what I've started doing is, well, what I did on this one is I projected what I had seen in the past as far as the average Schlumberger moves, the lowest that I could expect. And I went ahead and figured my delta. I also figured my gamma, that measures the percentage rate of change of the delta over time. These are very simple percentages. If your delta is 0.74, that means that if the price of Schlumberger goes up $1, that means your option goes up 74 cents. Okay? That's 74 cents per dollar move per contract. So when you start doing the math on that, and then when it goes up $1, you can also add the gamma in there. Now say the gamma, say it was a 74 cent move up $1, the gamma tells you if it goes over $1 into the next dollar, the gamma might be, say, 0.24. That means you add another 24 cents to the next 74 cent move. And I'm not trying to confuse you guys. I'm just want you to understand the math is pretty simple using the gamma and the delta, and it's pretty easy to calculate. And what I have been doing over the last many weeks is looking at what the average, what's the average move of all these stocks that we see. Well, I'm actually going for what is the lowest move that's reasonable. For instance, on the May 2021 email I sent you with the 4 up moves, 4 weekly vertical crossovers up, the 16 down, of those 4 going up, like I said, the lowest was 0.84. The next was 2.63. The next was 3.85. And then, of course, Schlumberger at 4.63%. Now, you start looking at options contracts, as I tend to purchase them, which are 4 to 5 months out in time, in the money, with a delta approaching 1. Now, what does that mean? If you buy deep enough in the money, it means that your option tracks the move of the stock almost dollar for dollar. A 1 delta means for every $1 the stock goes up, your option goes up $1. Now, you didn't pay the stock price, okay? You paid the option price. So that means that for every share you own, you go up $1. Now, you start figuring that out, and it is a crazy return. Now, you have other things that you have to consider when it comes to options, and that is why I would encourage you, read up on the Greeks, understand implied volatility, understand not only the delta and the gamma, but also the theta and the vega. The vega is the implied volatility. The theta is your time decay. And we talk about those things. The reason I buy out in time and spend more is I don't want to have to fight time decay. And what I've learned with how magical these weekly vertical crossovers are is that with the momentum that you have from the weekly vertical crossover and the volatility you have from it, on all of these trades, there were only 2 that failed on the down moves for puts. And they failed only because they didn't get up to the 2.3%, which was sort of the median. When I started, I'm sorry, it was the lowest percentage, wasn't the median. It was the lowest average percentage that I found. I had HBI went down only 1.98%, so that was close to the 2% mark. Amazon only went down 1.20%. So the way I'm practicing my options, way I'd encourage you to practice your options, because again, I'm not giving you advice to go out there and spend money. We are not a calling service, we're an education firm. But I would encourage you to start looking at practicing options are, if you start pricing in these kinds of moves, and you can bet on a move of 2-3%, and you start looking at options, figuring your delta and figuring your gamma, and seeing the kind of moves you can get. I mean, getting a 15% return, getting a 20% return, when 80+% of your moves are going to be accurate, and at least that 2.3% rate, you're going to see incredible success, I feel like. So I do want to encourage you, and again, if you just want to look at practicing your long positions, if you want to practice shorting, however you might decide to do it, I just would encourage you to look at, and again, I'm just looking at this raw data. I'm just feeding it in. I'm not going back. So far, I haven't spent the time to go back and look at what's the dividend date. You know, all the different other variables that you can have, winter warnings, winter earnings on these stocks. I'm just looking at the momentum driver of the weekly vertical crossover up or down. And it has been absolutely spectacular and very, very exciting. So I would very much encourage you, refamiliarize yourself if you haven't taken the 3-part series that is there in your show, that's there in the notes. I send you guys every month. I'll send it out again probably today. But that 3-part series on Options Made Simple is a great starting point for those of you who might not be trading options at this point. And I just found that list we started generating of those has been very, very successful as far as trading goes, giving you lots of things to practice, lots of things for you to learn from, and it just has really, really excited me. I thought I would share that with you. And if you guys are interested enough for me to go through some of the calculations that I look at when I'm looking at options pricing on getting into an in-the-money, out-in-time option, looking at the delta, looking at the gamma, looking at the move, I go ahead and compute, okay, I'm seeing that the worst I can expect from this is a 2.25% move. That's what I've seen with these over time in the current market we're in, and updating that weekly to see sort of what the average moves are. Not that you're necessarily going to get that the following week, but it gives you a closer snapshot in time. I then simply go in, take that delta, I look at what the percentage change would be, how much money that would increase the value of the underlying stock, multiply it by my delta. If it is over $1, then of course I add in my gamma for the next round, and I look at that, compute what the percentage looks like it would be exclusive of the row, and then calculate that out. Go ahead, purchase my option, put in my good till canceled sell order immediately at that 2.25% increase based upon how the option should perform, and then let it ride. And it is amazing how well it has been doing. Now, everything, of course, is subject to change from one week to the other, but it has been amazing, and I have been very excited about it, very impressed with it, and I would encourage you to experiment with it, not with real money. Don't ever start off learning anything with real money, because you are gambling at that point. You don't have your feet solid in the sand. You're standing on sand. You don't have them solid on the ground, and you may very well get taken out by a big wave. So please don't do that. But that has been very exciting. That's what I wanted to encourage you to do. We're not doing this research every week, identifying those weekly vertical crossovers up and down for our health. And we're not just sharing them with you for kicks. That is super valuable intel. We've seen for years now, since I came up with that weekly vertical crossover on the price percent oscillator, how valuable it is. And again, going in there, assessing that at the end of the day on Friday, potentially putting in your buy orders for your options, immediately entering your good till canceled sell order, and firing that off into the market. And of course, those of you who subscribe to TC2000, you can do that practice trade right on the website. It is good practice for you also for using the brokerage service when you get really good at this, at some point in time through TC2000, being able to purchase right there on the screen. So it's good practice learning how to do that. So I would encourage you, if you're not subscribed to TC2000, we got a $25 off coupon there if you'll just use that link. I think it's the best. Now, I know there's probably some of you who like Fish or Swim. That's all fine. You know, more power to you. And no requirement to do any of that, but I just haven't found anything better. I can get on the phone and call those guys, Mike and them. They will call you back, walk you through things that you're interested in learning, what you're trying to do. They're all amazing, and I'm very impressed. If you have an indicator that you found somewhere they don't have on their charts, which is rare, they'll even put it on there. I mean, it's pretty amazing. They're amazing folks, totally accessible. They're here where I live in Wilmington. They're maybe 5 miles from me if I ever wanted to drive over there, which I've done a couple of times because I know Chris who owns it. But it's just an incredible service. So let me, with that said, before I get into some questions and look at some other stocks, has that generated any questions from you guys? I don't know how well I've explained what I've been talking about. I didn't put a PowerPoint together. I just have the screen up for you guys. So let me just put up Schlumberger for you. Now, Schlumberger made a huge move yesterday, but I wasn't there for that move. I was there for the weekly vertical crossover on the 14th. And you can see where that weekly vertical crossover on the 14th occurred. The nice thing about it is we had the weekly vertical crossover occur at the same time that the derivative oscillator crossed over going up. That was quite nice. And of course, Schlumberger has gone from somewhere around the 32.16 mark up to 35.19. That's been the high. I was out somewhere here where it hit up at 34.33. Now, what I had going for me also was I had the implied volatility, which was rather great. And of course, that helped me too as far as the pricing of my options go. So when you start studying the delta, the gamma, the theta, and the rho, those four, when you start studying those and understanding more of what they're about, you'll particularly be interested in what's going on with the vega, which is the one thing we really can't control, and that is the implied volatility. It can change on you in a heartbeat and really affect the value of your option. But what I like about these weekly vertical crossovers is, first off, we have the weekend effect. Remember that? That is the Friday effect. That is the study that was done by one of the big market guys back in the 70s that found over and over again what happened on Friday tends to digest over the weekend and then move through the next week, at least the beginning of the week. So when you have the weekly vertical crossover, it's a sea change, as we call it in investor sentiment, either up or down. And that tends to be a great driver of volatility. So the volatility's happening on Friday. When you enter, that's already affected the price of the underlying of the option going up. You get in, and then of course, as things continue on, Monday tends most of the time to mimic Friday. You then have that going for you, and then because you are looking at your delta, you're looking at your gamma, you're doing your computations right as before or as you're buying the option, putting in your good till canceled sell order. You're not waiting for the peak. You're simply waiting for the standard up move that you've been tracking and where you can at least expect it to go. And then, boom, the minute it hits it, you're in and out. Same thing applies now for you setting your loss parameters. You know, again, you're still using your charts. You're still watching. Things might not happen quickly. They may happen slower and over time. So again, means you still use everything you know. You're still watching the charts, paying close attention to that weekly chart. Is it continuing to pull away the price percent oscillator from the red signal line? Is the derivative oscillator gaining momentum? What's happening on the 2-day? What kind of forewarning is the half day giving you, but not betting the farm at all on the half day? Because the real, again, as we see over and over again in these markets, the real controller is the weekly. And if your weekly's staying strong, regardless of any movement you might see in that half-day chart that starts to scare you, you realize that the power of that bigger wave tends to control. As we say, all things being equal, the market tends to move in the direction of the largest chart. You're using all the charts all the time. You don't want to be surprised, but you're looking. That's the reason we draw these trend lines. That's the reason we look at our Bollinger Bands. That's the reason we use the Heikin Ashi candlesticks. All of those feed into our computations as to helping us see what's really going on and making the best decision that we can, closing the trade when it's not working. And the nice thing about the way I set up my options trades are, I set it up, I plug it in, I know what I can reasonably expect it to do based upon recent moves in the market with the volatility, with having computed my Vega and my Gamma, and I know exactly what I could expect at a minimum. And if it's 13%, 15%, 20%, I'm happy to have it and go home. Take that and go home. And not be greedy, not say, no, I'm going to get 100%. The likelihood of that goes down substantially. But taking little chunks at a 13, 15, 18, 20% return, I'll do that every single day of the week, multiple times if I can. Okay, I started to ask for questions and then I ran my mouth again. Anybody have any questions about what I've talked about so far? Good. It makes me think that maybe I explained that pretty well. Let me jump into some of y'all's questions about a couple of stocks. We have from Chris. He is RCL. That's Royal Caribbean Cruise Lines. He's looking at a potential. Now let's see. He's in a trade and deciding what to do. I'm not quite sure, Chris, what trade you would be in. Hopefully you are not in the weekly vertical crossover going down from back on the 23rd of April. You would have been completely hammered at this point. If you're looking at potentially jumping into Royal Caribbean with a weekly vertical crossover at the beginning of the week, that is something you can sure look at if you go and do some backtracking and look at what Royal Caribbean has done. How accurate have over the last year these weekly vertical crossovers been? Well, there was a decent one that popped up back in late May of last year. Only gave you about a 3-week or a 2-week run after the crossover. Then did this crappy thing that can happen with the price percent oscillator. It peaked and then it ran down and sideways. And you can see what happens to the weekly vertical crossover, to the price percent oscillator when that occurs. Derivative oscillator, since it's the leading indicator, showed that weakness. It started dropping off precipitously, never managed to go red, but because the price percent oscillator is a percentage version, as I say all the time, of the MACD, the moving average convergence divergence indicator. The converging and the diverging got sloppy in the sideways slide, never caused it to cross over going down. So when it popped over again, back in August, you may very well have had a 2-day recross that could have gotten you in. If indeed that occurred, that would be beautiful. Check that out, see if that happened. That would have been a nice potential there. Things then popped up and then again slid over and down. Hopefully you would have tracked what your average moves might have been on these percentage-wise and seen what they looked like. Maybe you had used that to set your profit and loss bands as far as percentages go, or as far as maybe just sheer price movement went. You may have been looking at that, been able to read that. The 2-day crossover going down may have gotten you out here in about mid-September, which would have been nice, would have allowed you potentially to catch that move. Then crossed over, got close to crossing over going down back in November, early November of last year, and then crossed back over going up again. And again, a nice potential for a gain over a 3-week period. See the 3-week period there? See the 3-week period there? Looks like Royal Caribbean tends to make 3-week pop-ups or so. Then what did we see happen with RCL? It ended up crossing over going down right there, and again gave you a very short period for shorting. The momentum may have allowed you to do a nice put in there. Something, again, I encourage you to practice over and over again. When you get into a stock, if say you've got a family member who's in this business, and you're able to sort of track like what, now I'm not talking about insider trading or anything like that, but you know somebody that's in the cruise business, like, hey, we're getting ready to go back online, this, that, and the other. Things are looking good. Things are tough. We're mothballing ships. I mean, you can, or if you're in the business, maybe it's electrical supply, and when prices are going up, that things are surging. It's the kind of stuff that, again, I encourage you to think about for stocks or sectors that you might be interested in tracking, because you have an interest in that and maybe some personal knowledge that might be real helpful. What do we see again with Royal Caribbean? Popped over going up in February. Now again, I would encourage you to check out just a regular candlestick to see what the jumping in point was. Don't know if it was 87 or not. Reached a high that next week of 97. So again, might have given you the ability to jump in. Well, and then, of course, it slowed down the following week, but then popped up again that 3rd week. Look at that. You see it over and over. Now, this weekly vertical crossover is occurring at the end of the 2nd week of up movement. Maybe get another week or two here. So Chris would encourage you to do some backtracking, check out those 2-day recrosses, and again, potentially look at jumping into a practice trade here. You also have the derivative oscillator crossing over at the same time. So those are all important things to pay attention to. You can see how implied volatility is increasing. You have that Bollinger Band stretching out on you, so there's some more room to move. That is the way I look at things when I start looking at stocks. And again, I spend a lot more time on my backtracking, taking my charts, breaking them down, looking at 2-day recrosses, 2-day crossovers for potentially pulling me out. Sometimes they work great. Sometimes it's way too long to wait. So again, you're looking back in time, taking a snapshot. It doesn't mean you're going to be perfect about the future, but it gives you a better roadmap than just saying, what the hell? I'll just throw some money at things. Anything you can do to give yourself an edge is what we are all about. Okay, let me go through one more here. Monty, who I always love to hear from, he has asked me about, now this is an ETF that reshuffles itself every 6 months. It reconstituted last Thursday. It is a momentum factor ETF, so they're looking for momentum stocks. How does it track initially on our charts, on our weekly, if we just look back in time, okay? Looking back about a year. We see beautiful weekly vertical crossover going up. And again, I don't know exactly when. I'm guessing that it must reshuffle June. So would that be July, August, September, October, November, December? So maybe every December and June it reshuffles. Well, it crossed over going up back on the week ending the 8th of May 2020 and just jammed up quite nicely. Maybe there was a 2-day recross here that would have given you a nice clean pullout. You, of course, don't want to wait until your weekly crosses over going down. That's way too late. And then things got sloppy. Well, not necessarily. You might have been able to, well, let's see. That is a weekly vertical crossover right there. Yeah, it is. It is. So crossed over there, popped up only 1 week, went from somewhere around the 149 to the high of 155. So that's about $6. Don't really know if you would have captured that. Of course, it then slacked way back on you and then hammered down and then got sloppy because that screwed with the accuracy of our weekly of our price percent oscillator because of that up move and then that down move and a sideways slide after the up move and a sideways slide after the down move. Then it popped up. It took the price percent oscillator a while to then finally turn around, and didn't happen that week when the derivative oscillator crossed. It was laminated on the red signal line. Happened the next week, and again, decent move there, very decent move there. Don't know if a 2-day would have taken you out. That would have been fine. It did scare you a little bit that week, ending the 29th probably, but then popped up again quite nicely. And then, of course, the hammer stroked down, which, again, that was a nice move down. Would have given you some opportunity to short things if there is a liquid option there. There may not be. And then, of course, this latest move, it did end up crossing over, but then, of course, immediately would have hammered you with that down move. What's it going to do now? Don't know. Don't like what it recently did. Not quite sure why it did that. You might check. Maybe it had to do with coming into the reshuffling. I don't know. But did lose for 3 weeks without really any warning immediately after a weekly vertical crossover going up, which scares me. And then, of course, these last 2 weeks moving up, but don't have a crossover yet. Again, as we've seen in the past, around this May-June time frame, that's, in the most recent past, that was a beautiful up move. See how well they chose their momentum. You might have a great opportunity there, Monty. Just pay attention to it and see how it goes. Set your profit and loss bands and potentially let that ride on a good practice trade. That is where I am, guys. I will open the floor for a couple of questions before we run out of time. I usually like to keep this about 30 to 45 minutes. We're about the 40-minute mark, a little over the 40-minute mark. What kind of questions we got?
Hey, Thom.
Hey.
This is Reggie.
Hey, Reggie. Good, thank you.
First of all, I just want to say I'm pretty new to this.
Yeah.
As you know, I think I came on the last Patreon, but truly appreciate everything you've been doing.
Thank you.
Especially for someone that's new. I've bet a bunch of people have been here, but new to me really helped me to learn at least the fundamentals. So
Good.
I just want to say thank you for that, and at least to the point where my child understands. So you made it very simple. Kids,
Good.
I practice KISS.
Yes.
Keep it simple. So I've told her that. But just as I'm getting deeper into this and really starting to have action, there's a couple stocks that I wanted to understand a little bit more about. One of them being RBLX. Now, this is a brand new company. So I wanted to understand your thought process and if that is even something you would consider. Now, I know you say it needs to be chartable.
Yeah.
I wanted to understand your thought process on how you would handle and if you would even entertain IPOs. Things that have been in the market a couple weeks.
Right.
Months.
And Reggie, I don't. And the reason I don't is based upon the magic that we see with the weekly vertical crossover and how over and over again it works, on the stocks that it works on and the ETFs, 80, 90% of the time. That gives us an edge over everything. I'm looking at this. This could be a crazy good player. It could also absolutely die on the vine. I got nothing here to chart. It has only been out since March. Nice big up moves I see there, but I'm just getting Bollinger Bands starting in May on the 2-day, and of course on the 4-hour, or the half day rather, 193 minute, I can see where our charts look like they're working pretty good on that. I mean, they're working actually pretty damn good on that. They're working pretty good on that. But all that said, I would encourage you to. I never discourage anybody. Say, well, just screw that. Don't do it. I would encourage you, from what I'm seeing from this half-day chart, why don't you just play with it? I mean, why don't you just track it with that half-day chart? You can do paper trading at TC2000 on it. You can see how accurate it is. Of course, the problem with owning it is, since it's so new, I mean, it could overnight get crushed. I mean, it could also go from 100 to 500, but it could also go from 100 to 50, from 100 to 25. I mean, you just don't know. I would encourage you to, read up on the corporation, see what they're doing, get as much of the information as you can from their filings, doing all your research and those kinds of things. The problem is, too, since it's so new, you can't hedge yourself, protect yourself with puts, all the other things you can do with options that can come in. And if you are doing risky things like buying pharmaceutical companies that have drugs that are potentially going to make it or not make it through a trial, well, of course, you're like, hey, man, I want to be able to drive this on the upside, but I want to purchase enough puts on the backside to insure me in case this thing gets hammered. So, those kinds of things with new companies, you're not going to have the ability to do. You're not, if you even have options, they're not going to be liquid. They're going to be like, the options $10, the bid ask is $10.15, something crazy where you're not going to be able to make those numbers work. So I don't discourage you looking at how accurate this half-day chart is. It's pretty right now. I wouldn't discourage you from practice trading it, but again, keep in mind all of those things, learn about it, see how it works, and again, apply these to any other new companies that you see. And again, my goal here is not to make Reggie into Thom. My goal here is to have Reggie be a thinker, and Reggie be able to take what Thom teaches, apply it as is it Miyamoto Musashi? Yeah, Miyamoto Musashi says, from one thing know 10,000. So take the analogies, take the lessons, take the things you learn from here and from everything else you read, from any other website you go to, from any trainings you take, live, in person, online, whatever they may be. Take the gold and throw out the dross. Learn, apply, grow, do what you want to do what you like. Always be willing to experiment. And when you experiment, you never experiment with real money. We can do all this practice trading for free. Practice trade for free. If you want to learn how to short the market, learn how to do that for free. Practice trading. Do the same with any technique you want to learn. Once you master it, then of course we urge you to then get in to a fractional share. And I see this is trading about $100. When you get really good at it, maybe Reggie turns around and buys one share. He fractionally trades. He buys a small amount, $100 or less, and fractional trading means they fractionalize a share, so you could buy $1. And then you can see how well you can do. Maybe you buy one option contract and you see, okay, I think I've proved to myself my practice trading works, my paper trading. Now, before I start throwing big money in, I'm going to buy a fractional share of the S&P. I'm going to buy $100 worth. That way I can track it percentage for percentage, see how good I am. I'm going to buy one option contract, see how good I am. And that way you're playing with a little bit of real money. You're not going to break the bank. If you lose $50 out of 100, you prove to yourself, I don't know what the hell I'm doing. I need to practice more. Or my methods are not working. Or I don't quite understand how to trick this out. But I'm telling you, this is not rocket science. You can do it. You just have to. And the people who stop doing this are the people that don't spend enough time practicing and then who put real money in and lose. And then, of course, what I hear from them is, I don't know how you do that, Thom. Why do you do that? I tried doing that. It's just a fucking crapshoot. Excuse my cussing. It's just a crapshoot. I might as well go to Vegas. And I tell them, yes, you might as well go to Vegas because you don't know what you're doing. You're wasting your time and your money. So I hope that's helpful.
Extremely
Okay.
helpful. I actually got in practice traded on the 20th.
Uh-huh.
See that red down. I used the 195 in the day to
Okay.
chart this.
Yep.
But I wanted to understand how you felt about it. Because I keep hearing you say, if it's not chartable, we don't do it. So I know that the daily and the 195 don't really serve the purpose or the power of the weekly. So just wanted to get your view. I really appreciate that.
Yeah, well, you don't have a weekly that you can do a whole lot on.
Exactly.
And that's part of the problems with charts when you've got a new company. The other thing is too, now I've talked about this with gold for about 2 years. Those who've been with me a long time, you remember when the half-day chart on gold was golden. When it crossed over going, I didn't use the weekly, I didn't use the 2-day, I called it a total trading chart. It was an amazing chart. It worked until it stopped working. It stopped working, I think, January 2019. It worked from about 17 to 19, but it worked. When you find a chart, a 2-day chart that is magical, doesn't matter what the weekly's doing, doesn't matter what the half-day's doing, you go back in time and you say, look at this 2-day chart. It works every time. Well, guess what? You don't say, well, I can't use that because Thom said we have to use weekly vertical. Are you out of your mind? Of course you use that chart. It's the same with the half day. If you find a half day where you look at the stock or the ETF and you say, look at that half day chart. It has worked every single time for the last year and a half. Now, should you maybe use the half day chart? Yeah, absolutely. It's golden. Circle that, remember it, underline it, do it. Thank you, Reggie. Anybody else have a question before we're over time right now, but I'll try to entertain one more question. Anybody?
Yeah, I got a quick question.
Yes.
What do you think about those industry tracking charts?
Oh, you mean sectors? Sector charts.
Yeah, the sector chart.
Yes.
Is that any benefit at all?
Sure. Let me tell you how to use that. You just like the S&P 500, the SPY, I've already got the Qs pulled up here. The Q shows you what's going on overall with the stocks in the NASDAQ, okay? That shows you, sort of where the NASDAQ is. Now, your sector charts give you a smaller version of the stocks that are in that sector, such as housing. You look at the housing sector. And that will give you a feel for if you're interested in some of the big, housing stocks and what is it? Quinta. I'm trying to think of some of the big housing builders and all. I used to trade them all the time years ago, and I can't think of their names right now. But so let's take the housing sector, and you look at what it's doing overall, the sector's doing overall. The nice thing about the price percent oscillator, it allows you to compare what's going on with the sector, with the movements, and you get to really sort of see if the whole sector's moving up and you've got a laggard in there that is getting ready to move over and you see how strong the entire sector's going. If you look back in time and compare and you say, hey, this Puente Homes or whatever tends to be about 3 weeks behind weekly vertical crossovers going up on the sector fund. I'm going to learn from that. And the next time I get close and the weekly vertical crossovers occurring on Puente, I know I've looked back, it's going to be good 9 times out of 10 for a crazy run up of 5%, 10%, whatever. So you can use that and compare and use those. And you can also trade those sectors too. You look back at those sector charts and you say, hey, every time a weekly vertical crossover occurs, on average, it's a 2.5% move. If you've got liquid options that are available in those sector funds, that's a possibility. You could just buy the sector fund on a weekly vertical crossover going up. So yes, anything that's chartable and trackable and accurate, and you can backtrack it and look at it and see it, and over time it works, absolutely use it. I don't discourage you from looking at sector funds, index funds, commodities, whether it's corn, pork bellies, whatever it might be. You can find ETFs on pretty much anything. One of the reasons that we track gold is so that you guys are able to get a feel for a commodity. The reason we track bonds is so you can get a feel for bonds. The reason we track Bitcoin, which is up almost 3% today, maybe it's hitting a bottom here, is because people are interested in Bitcoin. And again, you get a feel for cryptocurrencies. Very hard to track them. Thank goodness for NYXBT, the New York Stock Exchange Bitcoin Index, which gave us a chart where we could track it. So again, I don't know of the ability to, we don't have the ability to track any of the other altcoins. But again, that's important for all of us. So thank you so much, guys. Any other questions, I would encourage you to email me, cw@chartingwealth.com. Again, I so appreciate you. Please use these weekly vertical crossovers from the S&P 500 that we are sending you every week. Look at them. Find a few of them to practice trade. Practice some options. See how well this works for you. Or just buy some long positions in your practice trades and see how this stuff works. You will get as excited as I am or more so. God bless. All the best from everybody here at Charting Wealth World Headquarters. Thanks, guys.